This is Satya Pradhuman of Cirrus Research. The signals report is just out. The title, The Nvidia and Rest of the Market Divide. In this report, we underscore the broad differences that are separating the current dominant Nvidia trade with the rest of the market. A few things that are surfacing to us. One, the profit cycle seems to be stabilizing, and as a result, a broader set of stocks are surfacing. Two, it does look as if the speculative crowding nature observed has gotten more extreme in the last few months. Put this together, and what we see is really a change of leadership, or at least, or at minimum, a broadening that's likely underway. Our Cirrus style oscillator, for several months now, has continued to fade from a growth overweight. That was seen maybe 6, 8, 10 months ago. Since then, what we've seen is a gradual movement towards a style neutral, and in the last few months, a value overweight. What's driving this? At the end of the day, we're looking at record low credit spreads. In other words, credit's pretty easy. As a result, a whole lot of firms can borrow money and also go after growth projects. What that means is there's fundamentally a profit cycle that's broadening, allowing more firms to participate and generate earnings. So our conclusion about a value-driven market is the idea that if the profit cycle is stabilizing to growing, profits are more abundant. And as a result, the question becomes not where can I find growth, but at what price? And as a result, we do think this broadening is underway. Additionally, what makes this market quite a bit more volatile is the sense that we are only looking at a few stocks that are trading here. And that's not a good thing. So our concentration measure, the polarization quotient, remains effectively in a sell reading. What this is saying is volatility is likely to pick up, leadership factors tend to break down. This is a time to be somewhat cautious, pay attention to your benchmark, and look for some diversification, as it does look as if you get outside of the larger cap camp, there is real change underway when we look to mid and smaller cap arena. Ultimately, we're still favored equities, though with some of the recent run-up, the equity overweight is probably less powerful as it was maybe 3 months ago. We have certainly changed from a large cap overweight in the last few years to where we're now more of a size neutral based on the indicators. As I've said, our style reading is squarely in the value camp. We haven't seen this in a few years. The risk appetite is a constructive reading that's saying it is not frothy enough as yet for us to really get worried, which is to me a little surprising, but that's just where it sits. And then finally, the crowding reading is squarely in cautionary territory. With any questions, feel free to reach out to us. Thank you.